Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at a great dividend company that has been giving dividends for the past 29 years consecutively and has been growing dividends of 12% for the last 5 years. So if you're interested in this one and you want to take a look at it, sit back, enjoy. Do me a favor, like and subscribe. Share this one to other people that want to learn about dividend investing. With that said, let's take a look at this company. So the company I'm talking about is Badger Meter. The ticker symbol is BMI. Basically, this is a company that is an innovator, manufacturer, and marketer of products. The company provides water solutions encompassing flow measurements. They offer customers with data and analytics to optimize their operation. So if you go to their website and you want to learn a little bit more about it, they've been doing this thing for over 115 years of proven technology and innovations that you can trust. So what they do is they have experience in a wide range of meters and flow measurement technologies, and it's usually based on the water system. So as you can see from their website, so you can see right here, 3 smart water solutions to improve meter reading and utilities. So let's quickly take a look at the PowerPoint presentation. So as you can see, sales are about 535 million, 117 years of operation in about 50 plus countries, rated AAA, and then you can see they're industrial leader in North America, smart water metering with strong global position. Now if we go look at some of their portfolio, you can see on here you have the diverse digital solutions. You got data, communication, and then the outcomes. Now if we go a little bit more, you can see the second quarter financial snapshots. The sales right here, 12% change, gross margin. You got your EBITDA from 28 to 25, 11%. Now if we go a little bit more further to some of the capital allocations, you can see grow the dividend annually in line with earnings, strong free cash flow, working capital, no outstanding debt obligations of 100 million of cash at June 30th, 2022. There's a lot more information in there, so definitely take a look at it. Now if we go to Yahoo Finance, who are the top institutional holdings in here? As you can see, BlackRock has about 5 million shares. You got Vanguard, you got State Street, JP Morgan right there, Invesco. Now sticking to Yahoo Finance, you can see 52-week range. The low is 73, and then you got your high of 122. At the time of this video, it has at 99. You can see the PE ratio is 45. Looking down to here, you can see the earnings. You have 3 beats and 1 miss. Financials, you can see the revenue from 2021 is about 505 million. The earnings about 60 million. From the chart alone, you can see it was kind of steady from 2018 to 2022, and then that big jump right here from 2020 to 2021. Looking at the trends, you can see a mixture of holds and some buys. Recommend ratings is between a buy and a hold. Price target is a little bit higher, and then the average is 96. Currently it's at 99. Now if we go to Yahoo Finance, you can see there is an article about it dated at August 20, 2022. They just talked about how it's increasing its dividend to 22 cents. Now if you look down through a little bit more of it, you can see some of their views of it, about how it has a solid track record. The dividend looks good, like it looks likely to grow, and why they really like the dividend. Something for you to kind of look at. Now, if we swing to Simply Safe Dividend, based on their dividend safety score, they rated as 94, which is very safe. The dividend yield is about 0.91. Market cap it's a mid cap of 2.9 billion. Looking at the key metrics, you can see a payout ratio is about 37%. During the recession, it has increased it from the 07 to 09. Now going through the dividend growth, you can see last 5 years, 12%, which is very fast. Last 20 years, about 9%, which is fast. I would like to have this more, a little bit higher, but you know what, hey, 9%, that's pretty good, not bad. The latest was 13%, which is very fast. You can see, again, from the chart, always like this upward trend. Uninterrupted dividend streak of 29 years without a reduction. 29 years consecutively increases. Now, if you're wondering about the payment detail, you can see quarterly, get paid on March, June, September, and December. Your annual payout is 90 cents, which breaks down to about 22 cents. As you can see, it has increased. Yeah. Now, looking down to what they think it is, what they consider it is overvalued. So that just to keep that in mind. Sector PE ratio, you can see 41, whereas the informational tech is 17. Looking more at the financials, you can see some of these things. Total sales, outstanding sales, return on investment capital. You can see the last 12 months, 19%. Return on equity, 16%. Now, let's take a look at Seeking Alpha. And what did I do? One of the things I want to look at is the 10-year. As you can see, 10-year performance about plus 479%. And then for the past 5 years, you got plus 121%. So now switching over to Webull, based on their analysis, they're 7, they rate it as a hold. You got about 55%. It's a hold, strong buy about 14%. And then you got your buy, which is another 14%. Their price target is in the high of 125, the average of 70, 97, and then you got 80. Now take a look at BarChart. As you can see, based on the chart, so the black, so you can see they're starting to get into the upward trend. So we'll see how that goes. The volume is pretty steady, about 100,000 to about 80,000. You can see the MACD here has crossed over here, but then you can see from here it might go downward. So depending on what happens in the next couple of days, maybe this thing will turn this way. We'll see how that goes, and then you can, if you're thinking about this, you can even get it in a cheaper price. There is Rizzo, you can see it's on the sell side, so that's something to kind of think about. Now looking at stock Rover, one of the things I also like to look at is the risk and return, and then they have the comparison between the industry and the S&P 500. You can see the performance right here. 5-year return about 136, 3-year return about 98%. Then you got your 3-month return. Your growth right here, you can see 5-year average 13%, and then profitability right here. And then you got also your dividends right here. Yeah. Swinging over now to tip ranks. Based on their stock analysis, they rated number 7, and then you got your insider transactions, which is they sold their shares. Hedge funds has also decreased. Their analysis forecast rated as a hold. Now, if we look at this one, you can see their target is 96 with a 3% downside, with the high of 125, and then you got 96. And then you got your 80. Analysis recommendations, it's a hold, pretty much kind of same as every other sources. You got 1 buy, 4 holds, and 1 sell. Now looking at some of their analysis, you can see these are the guys, and then their positions is basically mostly a hold, 1 buy with I believe with a 25% upside, and then the other ones are pretty similar. Now, if we swing to simply Wall Street, based on the share price and fair value, again, they estimate this using the discount cash flow model. The current price at the time of this video is 99, and then the fair value is about 80. So they feel like this is an overvalued, 23% overvalued. So based on their price analysis, you're going to pay a little bit more. So, so that's something to kind of consider. All right. Now, lastly, switching to RobinHood. If you look at the day, it was down 1%. For the week, it was down 2%. For the month, it's up 12%. For the 3 months, it's up 26%. And then for the year, it's only down 5%. So you can see you could have bought it at June 16, 2020. So 2022 and $73, that would have, you would have profited a lot more. Price to earning ratio is about 46. You can see right here. And then you got your analysis rating based on RobinHood, rated as a hold 66%, and then you have your buy of 16% and your sell of 16% as well. And then you got your earnings, and then they will have October 14th your pre-market. That will be, we'll see how this one performs. All right, that's a look at that one. I think I like the stock. Whether I'm going to invest on it, there is a place on it, but you know, I need to look more a little bit into it more and see if that's something that I would consider. There are other companies that, in my opinion, are better, but it is a solid company. So with that said, please remember, this is not financial advice. This is just me sharing. Thank you so much for watching, guys. I hope you like this video. Don't forget to hit the notification bell, like and subscribe if you haven't done so. There's also other videos as well, so if you're interested in other companies and you want to check it out, check out some of the videos as well. All right, please be safe out there, guys. Stay cool, keep investing, and I'll catch you guys in the next video. All right, take care. Aloha.